The Canadian housing market has seen a slowdown this year. Could 2026 see some stability back in the market? For more on what 2026 could look like for mortgages, let's bring in Penelope Graham, mortgage expert at Rate Hub. Penelope, thank you very much for joining us.
Hi there. Good morning.
All right, break out the crystal ball. What are we looking at for next year? It's been an interesting 2025. I think people are ready for a little calm.
It's been an interesting few years, really, in terms of interest rates. And what we can expect moving into 2026 is we are starting to enter an era of stability, at least on the variable mortgage rate side. Bank of Canada has strongly signaled that it's entering a prolonged rate hold. And while that might mean there's not future discounts on the horizon, that's not necessarily bad news for borrowers. We are now on the tail end of 9 cumulative rate cuts from the central bank as of June 2024. Overall, they've brought their benchmark rate back down by 275 basis points. And as a result of that, the best variable rates that are available today are the lowest that we've seen since the summer of 2022. So all in all, it's not a bad place for variable borrowers to be landing price-wise. And we are expecting that variable mortgage rates will remain the cheapest option as we enter the new year as well.
Okay, I was going to say, what's your best bet right now? I know a lot of people, I think I did it. I did this, I took a fixed 3 years ago. It's coming up soon, so I'm trying to make some decisions on it heading into the new year. What should people be looking at? Is it variable still?
So we know that variable always increases in demand when it's priced well. Fixed mortgage rates always have been and always will be the most popular choice. But we saw plenty of evidence throughout 2025 as rates were coming down that interest was picking up. We, within the Rate Hub site, inquiries for variable mortgage rates hit about 12%, and that's up from 7% in 2024, just to give you an idea. So we anticipate that this is going to continue into 2026, especially if the spread between where variable rates currently are and the best priced fixed rates, if that should continue to widen. Right now, we're looking at about 50 basis points of difference between the two, so not too bad. But it's been a really volatile year for fixed rates as well. Bond yields have been all over the map. They've been highly reactive to instability coming from south of the border. Division within the U.S. Fed, also reacting to stronger than expected economic reports in Canada. And in the short term, at least, we are expecting fixed rates to move higher, and it's very likely that they will continue to do so in the new year. So variable is going to become all the more attractive. Having said that, though, there's always the caveat that it comes with that inherent risk because it is linked to the market. And we are expecting, along with economists, that yes, we've got a rate hold in place likely for the entirety of 2026, but should the economy perform as the bank is expecting and we see some strength towards the end of the year, we might start to see inflation tick back up then, and the bank might be poised to hike rates once again, perhaps in early 2027. So those are all risk factors that prospective variable borrowers should be aware of.
Yeah, there had been some talk that maybe even the end of 2026 we could see a possible rate hike. So it is a guess, I guess. What do you base it on? It sounds almost not quite a wise. You're leaning a little bit towards variable, but in the end, what do you think you base it on? Is it the personal situation in the end?
It really does come down to your personal risk tolerance and whether or not your budget could absorb increases in your monthly payment. So you stress test yourself. Your rate is also stress tested by your lender when you take it out, factoring in if you could still carry it at 2% higher. But you always need to take into account the possibility that your rate and your payment or the portion of your payment servicing interest might change over the course of your term when you have a variable rate. And there are options. You can convert a variable rate into fixed. It's not always guaranteed that will be at the most competitive fixed rate. But there are options there if you're trying to create a strategy. It's really important that you discuss that with a mortgage professional when you're selecting your rate to make sure that you're picking the best fit for yourself.
And of course, also, you have to factor in the housing prices right now. We've seen those drops.
We have seen quite a soft housing market throughout 2025. This is likely going to be the case moving into the new year as well. In the short term, we might see a renewed sense of urgency from some prospective buyers because now rates technically have bottomed out. Those who've been waiting to see where borrowing rates would settle, they might now feel it's time to make a move. But overall, a lot of the factors that had dissuaded buyers last year are still very much present. That economic uncertainty, affordability hurdles in the most expensive markets. And this will continue in 2026. And we're going to see it concentrated in markets, in British Columbia, in Ontario, whereas markets where home prices are better aligned with incomes already, we might just start to see some more sustained demand there. And we might see a divergence in how prices are trending this year, depending on the market. But overall, if you're a motivated buyer right now, it's not the worst time to be getting into the market. It's very well supplied. Home prices are still quite soft. In November, the national MLS home price index still down 3.7% year over year. Average prices still lagging by about 2% compared to last year. And add on the fact that we still have comparably lower mortgage rates. The affordability conditions are some of the best we've seen in years.
Okay, we'll have to wrap it up there. Penelope, thank you, though, for joining us.
My pleasure. Thank you for having me.
Penelope Graham is a mortgage expert at RateHub.